Hello, it is the 10th of June and it's 2011 for the year. This will be the final video for the day. And I want to go over the weekly chart. I was pointing out at the beginning of the week that this was a chart of focus, which made a a higher low and a lower high from candle top to candle bottom. In fact, it was an extremely unvolatile week using price action as its measure. It's still holding along within this range, and I was stating its level to be that of cautiously bullish, because as long as you're over this 18 period average, or this bar, then you're in a bullish state for the most part. When you're coming off of lows, it's different. But throwing that aside, after having the big run, this big move was, as of now, a mere correction. It can still be the turning point, but if it continues to make these higher lows, and now that I'm looking at this here, it's two, three, four consecutive higher lows in a row, but it really hasn't been getting above this little triangle area, which means more than anything, what it's doing is making a ascending triangle where you have higher lows and the same highs for the most part 3 weeks in a row. Well, 3 weeks out of five for and this week. Each has the same level, roughly around $38 per ounce. The move earlier this week was a little bit lower, but again, you're seeing a lower move and a breakdown below this level merely reverses the trend. Maybe not. Of course, there can always be bear traps, and the market could go neutral, because that's really what the next state is going to be if the market doesn't go higher, really within the next couple of weeks, or at least it's got to continue higher lows. As long as it continues higher lows, the market's going to remain in a bullish trend. So it's still cautiously bullish because of the higher low, but it's really holding on with very thin right now because it's been consolidating for quite a while. There's no such thing as going up or down too much, and there's really no such thing as consolidating for too much either, as far as time is concerned. Okay, so again, breaking down below this level, the big Fibonacci mark is 3252, but really 3350. They're both pretty big. The next chart is the direction from the 50-day moving average, which is really showing that 18% is the resistance level, which makes it very easy to calculate because that's from the low, and the low is 32 and a half. So 22 or 20%, just breaking this level here, is about 6.5. That brings you to the 39 level. That just shows you how big it is. On a confirmed breakout above 39, what's going to happen is this market's, or the orange line is going to go higher, and then blue line is going to go lower, which would be thus the buy signal that I would be looking for, and really am looking for right now. And if this market breaks down, of course, and we test new lows or make new lows, then if we test new lows, then this blue line will go here, and if it makes new highs, if the market makes new lows, then this would make new highs. And because it's the direction from the 50-day, there's 250 trading days a year approximately, so that's about 1/5 of a year. So that's a little over 2 months. So there's still a lot of time before the $50 level, which is what this is being derived from, and the 32 level that this is going to be derived from. There's still many days left before that level expires. So therefore, the only way for a while that the orange line can get back down here is if it breaks below that 32 and a third level, where the only way the blue line within the next little while being a month or so, can go down here is if it breaks 50, because that's how it calculates it. And when it goes up for a while, then what happens is the 50-day low will start to rise near the end of this session. That's why in here the market was going sideways, where in reality it was going higher. This, to me, shows a good indication for short-term movements more than anything. And the breakout moves worked out well last time because it was signified well for this resistance, and the breakout was good here. The last time we had a downtrend line, and the downtrend line was broken, and then it established a nice level of resistance, and then really the breakout was in here, as it was confirming the breakout pattern here. Now you want to confirm breakout past this level here for the next one. And so for myself, it's really a hold game. I don't want to be buying any physical bullion right now because I want to see it confirm that it's going to be moving towards the next level, because if not, I'll just get the cheaper prices as it pulls back. And I would be thinking there's at the 31 level in itself is really big, but we've already had a pre-test. And when I say 31, even a pierce down to 30, 29.75, 29.50 would be a pierce below. And then 25, it's really tough to state if 25 is going to come into play. However, I would probably wait for at least 29, given the fact that most likely it would come with a volatile move. And that's, of course, if we make a new 50-day low. Alrighty, thank you for tuning in, and have a great weekend.